This video is an introduction to an important topic for me, responsible finance. It's very broad, but a little context may help to explain more about it. If we look back to 2015, there was the signing of the Sustainable Development Goals and Paris Climate Agreement as a measure of collective ambition for what would make the world a better place by 2030. This ambition comes with a high price tag, and all in total requires about $90 trillion well invested to be realized, which works out to about $7 trillion a year. About half of that, $2.5 to $3 trillion, is needed for developing countries. To put this number into some context, the total of official development assistance given every year as of 2015 was $135 billion. So we're an order of magnitude difference in what was required to meet the Sustainable Development Goals, a part of which is used to finance the transition to a low-carbon economy with a just transition, to limit the global temperature rise to well under 2 degrees centigrade with an aspirational global target that's been set for the temperature rise to be limited to 1.5 degrees. So where is it going to come from? Some of it will come from government sources, but a large portion will have to be mobilized from other sources, namely asset owners, insurance companies, and banks, the private financial system. Estimates of total wealth vary, but one from Credit Suisse's Global Wealth Report 2019 said that global household wealth accounted for $360 trillion as of 2019. Some of that wealth is non-financial wealth in land and buildings, which aren't currently in the financial sector per se, but the scale of the wealth in the world is much bigger than the amount needed to be invested every year. But it isn't available all at once, and most of it comes with some constraints on how it needs to be secured in the principal amount, or how it needs to be conservatively managed so it isn't lost. Other constraints about what types of investments are permitted, whether those are commercial, non-commercial, market rate, or below market rate financing, adds friction to the process of aligning the available wealth in the world with the financial objectives and the impact objectives. A big part of the barrier is the separation between charitable giving on the one hand and commercial investment on the other hand. And that's where responsible finance comes in, to help bridge the gap between the financial objectives that constrain different types of wealth and how they can be invested to meet the risk and return expectations of investors, while also contributing to the investment needed to achieve the Sustainable Development Goals in the Paris Agreement. Across all of responsible finance, the primary split is between commercially oriented investment that wants a market rate return, that may or may not care about the environmental or social impact, but it may want to see the impact created, but not necessarily part of the required return. Impact investment, on the other hand, explicitly prioritizes impact alongside financial returns, whether those financial returns are just enough to return capital, whether those are sub-market rate returns, or whether they're market rate returns. One part of responsible finance that's often overlooked, but which is very much part of the focus of RFI Foundation, where I work, is the focus on Islamic finance within the broader responsible finance landscape. And I think it really brings together some of these commercial and non-commercial sources of financing in a more systematic way. It fits particularly well because it has developed social finance tools, including Awqaf, along with commercial finance in Islamic banks, in sukuk markets, that already incorporate some consideration of ethical principles, and those ethical principles are aligned with Sustainable Development Goals and the Paris Agreement in terms of the protection of the natural world, the Islamic Declaration on Climate Change. There's work to do improving the link between financing and impact across responsible finance, and within Islamic finance is no different, but addressing all of these types of gaps between what we'd like to see happen to achieve the Sustainable Development Goals and the Paris Agreement, and what happens day to day and the constraints that the financial sector faces on where to channel funding, is really at the heart of what people working across responsible finance do. And it's an important role that will continue through 2030 when these targets are expected to be met, and well beyond. Thank you.